So we definitely saw market react. What did the markets tell you, Tim?
This is a really important earnings day, but as we like to do, we hit the most important story. I mean, this is a massive story because, first of all, let's just underline what we've been saying. New paradigm Fed, less detail. And it would be a mistake to interpret the lack of forward guidance that actually things are more benign for September. In fact, if anything, I think it does set us up for fear in September. But the market interpretation was, look at how the dollar dove. Look how gold rose. So when you have yields back up and the dollar dives, it's basically saying the Fed's behind the curve, and actually it's more of a credit response as opposed to, if the dollar rallied, it would be, hey, the Fed is front forward, we're going after it, and actually we're chasing inflation. I would also just say that Warsh's two tools that he's talked about, the fact that he didn't move on interest rates means to me he has to move on the balance sheet. And the balance sheet has really grown. And I think this is something we're going to hear a lot more about in the next couple of days.
So it was confusing, to be sure. But the thing that I found interesting, and talking to Andy Constant about this, was he was telling you loud and clear over and over, I'm happy with the long end being higher. It's doing the work for me. It's going to that. This will help inflation. Right? If he had done the opposite and the long end loved that because, he's addressing inflation, that may have been counterproductive. This is, this is a long time it's been coming for us to unwind this. And it's not going to be easy, but the market is doing it for us. And so it sounds to me like that's the way he's going to continue. And for us to wait for this, these small little issues of does he hike, does he not, isn't really where he's going. But the balance sheet, to your point about the balance sheet, that's important as well. We'll see what they do with the balance sheet.
Right. To that point, in terms of the market doing it for him, I mean, the 10-year yield is basically up one hike since the last Fed meeting. So, we're seeing that in action.
So I think he wants what Karen is talking about. He wants the market to do it around him, and he wants us to figure it out without the Fed holding our hand. So we went from sipping from a fire hose, to getting nothing, not even a trickle of information. So I get that we're not getting any information, but what could he do for inflation? History shows us that 75 basis point hikes are 0.1% influence on inflation when it's due to a supply shock, not a demand pull. So there's very few things the Fed can do when the Fed didn't cause this.
What do you think?
So I think the market is starting to lose today. We'll see what happens tomorrow, but starting to lose a little bit of faith. I think growth and inflation is high. The Fed is not addressing that higher growth and inflation. That's why the long end sold off. That's why the 2-year did nothing. Listen, this is a bear steepening on the back of strong growth. And I think at some point the Fed's going to have to address that.
To be fair, though, he has a committee. It's not just him waving the wand, saying, I'm going to hike rates. I mean, it was 9-3.
Yep.
That would have been a lot of convincing on the part of Kevin, even if that's what he wanted to happen. So how can we actually say we're losing faith in him?
Well, I think that's a fair point. I think there's a reaction that the market's losing faith in the committee or the reaction function of the committee.
Right.
I think it's not individual. I would agree with that.
Okay.